I'm journalist Angela Walker, and this is In Conversation With, a podcast where I talk to inspirational people and discuss underreported issues. Today we're going to look at the challenges facing startups, that's new business ventures, in today's economic climate. And we'll touch on angel investors as well. Now, we're all feeling the pinch with the cost of living crisis and fuel prices. And according to the Office for National Statistics, the economy grew by just 0.1% between January and March, and it's still smaller than levels seen before COVID. So what effect is this having on entrepreneurs in the UK? Well, to discuss this, I've got two guests today. One is an award-winning entrepreneur who says he's had to take his fledgling business to Asia to secure investment. Leroy Lawrence from Berkshire's come up with an innovative business idea that he says could change the way we shop on holiday or overseas. Hello, Leroy.
Hi there, how you doing?
Good, thanks so much for joining us. Now, we'll come back to you in a minute. But let's meet our other guest, Matt Adey, who's the Director of Economics for British Business Bank. Hi, Matt. Thanks for joining us.
Hi, good to meet you both.
What exactly does British Business Bank do?
So we are a national development bank focused on supporting smaller businesses get the finance they need to start, grow and develop their businesses. We do that in a wholesale way through a wide range of delivery partners. So we identify finance providers who can reach that SME market and we channel finance through them. So to give you an example of that, we have a program called Startup Loans, which is loans to entrepreneurs who have recently or are about to start a business. And as of February, over a number of years, we've now hit 100,000 startup loans in the UK, worth nearly £1 billion of support for businesses. So we're there basically to help. You know, we acknowledge that finance markets don't always work well for entrepreneurs, particularly for startup businesses, because they don't have the track record, so it's more difficult for them to get finance, and you can't get a track record without finance, and you can't get a track record. You know, it just sometimes doesn't work for people. So we're there to help fill those gaps in the market.
And I know, Leroy, that's something that you struggled with, finding investors in the UK. Tell us, first of all, about your business venture and then a bit about the trouble you had finding British investors.
Sure. Well, Pigee the homing pigeon, it's a mobile app. It's a mixture of a marketplace and a omni-shipping operation for tourists. It allows tourists, whenever they travel anywhere in the world, to buy anything they like in a shop and have it sent directly home from their shop, directly back to England or wherever they're from.
I know that you had trouble raising investment in the UK previously. Tell us about why you decided this time to look elsewhere for funding.
When I've tried raising money in the past, I felt a bit condensed into smaller ideas. I'm a big thinking entrepreneur who thinks globally, but I feel that when I'm trying to raise money in the UK, I'm being squashed into, well, let's just raise £100,000 and let's see how quick we can get to profit. Let's put you in an EIS scheme, which is, as I see it, it's great if you want to reduce your tax burden and risk in that sense, but it's a bit of a mindset of we're probably going to lose in this investment, so let's cover our back kind of thing. And I felt that I connected more with the kind of American capitalist idea, which is kind of go big and trying to make as much revenue as possible in a new business and discover a new fledgling market. So I felt that there was more connection with the way that American investors thought about business and the way that I thought about business. And I think that was backed up with, I think America for startups makes 20 times the returns compared to startups in the UK. So for me, it was a no-brainer, really.
And you felt, I gather, that British investors, they basically weren't willing to take enough of a risk and invest a large enough amount. Is that right?
Yeah, I mean, I could spend a lot of time collating together lots of angel investors. In fact, it's easier to raise money through angel investors than it is in the US, because in the US you need to go through a CF regulation, the SEC, which means you have to do crowdfunding, and they're really strict about which angel investors can invest. You have to have like a 200,000 income, all these sorts of things, and over $1 million in assets, not including your house. But so on the angel side, it's easier in the UK, and things like ES are attractive. But this particular business, it's a complicated business where we, at the beginning of it, we hadn't really figured out yet our product market fit. Just like most startups, we hadn't figured out yet exactly what this was even going to be. So even with my successful background in business and startups, when I spoke to investors, it was difficult to get them thinking, okay, wow, this is something that, you know, we're going to buy into, maybe just buy into you. We're going to think really big on this. This is going to be something that's going to IPO in the future. I just feel that whenever I speak to investors in the UK, and I've spoken to probably more than most people have, probably 5,000 investors because of my background over the years, I get the feeling of thinking small and not thinking really, really big when it comes to kind of global business.
Matt, what do you think about what Leroy's saying? Is that something that you see at British Business Bank?
I think this is a challenging thing to do, finding a match between someone with that business proposal and that opportunity they've identified, and finding the right investor who can understand and get that pitch and buy into it and invest in it. I think, as you say, Leroy, at the early stage, we do have quite a thriving angel community in the UK. We support that particularly for angel networks that are outside of London to try and, you know, if there are gaps, they're more likely to be away from London and the southeast. So we try and channel money there. But I think when you're looking from you've got the great idea and you can see the IPO several years down the track, often it's different investors at different times. So you'll get an angel investor early, and then maybe you'll move on to an early stage venture capital fund and then a late stage venture capital fund. I think what Leroy said is spot on in terms of, if you compare with the US, there's actually about as much equity finance at the early stage in the UK as there in the US if you adjust for the size of the country, of the economy. But there is more of a gap at the later stage in the UK. And we're trying to address that gap by putting more of our effort into the late stage. But it's a challenge at the start for everyone, because you've got to find the right investor and they need to understand you and you need to understand them. And that's quite a difficult matching process. So it's not unusual. 5,000 is a big number, but it's not unusual that people have to, with very good propositions, don't immediately match with an investor because they need to find the right person that understands them.
Matt, you just touched on angel investors. For people listening who don't know, what exactly is an angel investor?
Well, an angel investor is someone who uses their own personal resources and wealth to provide equity investment to startups and early stage businesses. And they're looking to usually take a minority stake, but they tend to take a relatively hands-on approach to helping that entrepreneur because they've put their own personal money at risk. So they're acting like an angel to help the business. That's where the word comes from. Although the relationship is a bit more business focused than it might apply from the angel name.
You've done this from both sides, haven't you, Leroy? You've been looked for investors for your current venture and previous ventures, but you've been an angel investor yourself too, haven't you?
That's right, yeah. I've invested into numerous startups in the UK and in the US and Africa as well.
And tell us again about Indonesia, because you're talking to us from Indonesia right now. Tell us about how your business is taking off over there.
Yeah, it's going really well here, actually. So I was here last year for a month and we did a pilot on our MVP. And this year, we've been here for 2 months so far. And we've been setting up a new sales team, meeting with lots of VC investors between here in Jakarta and Singapore. And yeah, the energy is right. We've been a bit fortunate that I created like an algorithm and asked it lots of questions to decide where would be the best location for this particular type of business, and it said Indonesia at the top of the list. And we've been a bit fortunate that there are lots of other reasons why it's been kind of kicking off here. One of them is that there's no omni shipping here, or very few omni shipping options here. People haven't even heard of offering, but there is tons and tons of logistics and shipping and growth in that market. So we've been fortunate in that sense, where we do some offers to vendors that they've never had before. And everyone, obviously the place is full of tourists in Bali, from China, from South Korea, Australia, UK, US. So it's a real tourist hotspot for this particular type of business. So yeah, it's an ideal place for it to start. It's been going pretty well so far.
So talk me through it. I'm on holiday in Bali. I find this beautiful statue, but it's too big for me to put in my suitcase or my hand luggage. Talk us through how Pigee works.
So we're about changing consumer and vendor interactions. So you treat every physical store like it was an e-commerce store. You walk into a shop. You say you'd like to buy this statue, for example. You might say it's too big to get home or too fragile. The vendor will say, "Don't worry." Normally, I'll say, "Don't worry. We'll go and call DHL. We'll get a quote for you. We'll come back to you tomorrow and see if you send this product home." But a very few percentage of people actually do that because they don't necessarily trust that vendor who they've just met. They don't know how much it's going to cost, and when you're on holiday, especially if you have to wait, if you can't buy something there and then, you're unlikely to come back and buy again.
You don't want the hassle, do you? We want it. We want instant gratification.
Exactly that. So with this, we've removed all of the friction. You just tell them what you want. The vendor says sure. Unlike with a normal e-commerce store where you list everything you own, they don't list anything until you ask for it. So they list product on the fly on request. They take a photograph, weight, dimensions, description, takes 10 seconds to do. They then click save. You then connect with them, normally by scanning their QR code. But last week, we just released this new feature that just when you're walking past the shop that's registered on Pigee, you'll get a notification saying, "Hi, Angela, looks like you're in so-and-so art shop. Would you like to connect?" Sure, I'd like to connect. It then shows you everything in that store. Just like an e-commerce store, you add to cart those products you want to buy, go to checkout, pay for it, including shipping. Forget about it. Go back to the beach, enjoy yourself, enjoy life. From the vendor's point of view, they receive a saying, "Angie has bought this made this order, please fulfill it." You then package that into one parcel, click send. Same day or next day, one of our shipping partners like FedEx or Lion Parcel turns up. They collect it, scan it as signed, they're off. So it's really easy for the customer, really easy for the vendor. More sales happen because it's easier to do, and you get repeat sales as a vendor, which you normally don't get with tours. Well,
I wish you existed about a decade ago. I've got a lovely engraved map that I bought in Malaysia, Kuala Lumpur, a few years ago. And I bought it and thought, how do I get this home? And paid a fortune to the hotel that I was staying at for them to arrange DHL to get it back. Cost far more than the thing that I bought.
Oh, no.
So I wish you'd been around a decade ago.
Here we are solving problems.
So obviously Leroy's found, he's identified a problem and he's come up with a solution, and it's taking off. How do other people, Matt, who've come up with a small business idea, get it to fruition? How do they go about even trying to secure, loans to get going?
So I think what you need is, the idea is great, but to convince an investor, you need a business plan. And they can come in different shapes and sizes, and different investors will be looking for different things. But you need to set out, there needs to be something they can look at and actually assess the viability and potential of the business. And often, they are willing to take a risk. These are risk investors. They're not looking for, it's not like a bank looking for a bank loan. They recognise that it takes time to generate those returns, and they're in for the longer ride. But you do need to convince them about the proposition, but also the way in which you get there and the steps that they can see that you will get there to a profitable business where they will generate a return when they exit their equity investment. And that's kind of different from a bank loan, where the bank is looking to see if there's any security. So if the loan doesn't get repaid, have you got any security you can offer up? Are there any assets you can offer and pledge against that? So it's quite important to think about the nature of the business. Is it something that's suitable for a bank loan, or is it a riskier proposition but where the long-term potential is greater, where you're more likely to look at equity investment? Because the majority of businesses that use finance use debt, not equity. But it's those high growth potential firms that need equity, and you need to be as convincing as you can in your case and find the right investor, and that takes time to find the right one, unfortunately.
At what point, though, do you sort of start pulling a pitch together? I mean, how far along the line, and at what point do you kind of go, oh, well, I've come up with this idea, but I haven't managed to find an investor. Perhaps I should move on to something else. I mean, how long should people spend how much time and money and energy should they invest in their initial idea before they kind of make a decision as to whether it's even viable?
I think the first thing you do is you try it out and test it out on people. It could be friends and family to start off with, and they might be a bit biased on the positive, but talk to other people who started a business, find out how they got it, and sort of try and get yourself into those networks of businesses. And lots of founders are very happy to share their experience. And so I'd encourage people to sort of go out and have those conversations before they're actually in a formal pitch situation where they're pitching to an angel investor or a venture capital fund. Have a go, get feedback from people, talk to people who've done it before, see how they did it, and make use of whatever contacts you've got to shape and inform that idea before you're at the formal, will you guys give me 100k or 500k to investment in this business? And that takes a bit of time. There's no one answer that you're not going to go from the idea, and a week later you've got a convincing proposal that an equity investor will go for. It'll take you longer than that.
You've got to be in it for the long haul. Leroy, it sounds pretty grueling. You spoke to like 5,000 investors, and what keeps you going when you're just trying to convince people to invest in you and your idea, and you keep getting knockbacks? I mean, that's tough, isn't it?
Yeah, maybe I'm a bit weird. I don't really care. I just keep going. Personally, I'm like one of those soldiers you turn on. I don't quit, and I hate quitters. If I'm honest with you, I hate quitting. If you need grit. I don't really care how difficult the problem is. If I decide I'm going to do something, I'm going to do it, and I get massive joy. I've done it in the past. I started up with stockbrokers. My boss at the time told me, "You'll never." I hadn't even said it to him. He said, "You'll never start stockbrokers. It's too expensive, too difficult." So suddenly I decided that I'm going to do that now. So I did that, and just maybe that's just how I tick. If I decide I'm going to do something, I'm going to do it. And when you start a business, especially in technology, what it begins as, it may be something completely different by the end anyway. And the most important thing in that business working is a bit of timing, bit of luck, and the founder being someone who doesn't quit and is continuously learning.
And so what advice would you have for, other young entrepreneurs who've got an idea and they might be like, in the really early stages?
Learn as much as possible. Go on an accelerator if you can do. Anyone ever selling you any kind of service or advice for money, completely ignore them, because there are so many people hounding you, trying to take money out of your pocket instead. Speak to founders as much as possible, especially if they're in that marketplace that you're reliant on. And expect your first business to fail. Doesn't matter. It's not really a failure. It's just a lesson that you're learning. Keep going. Don't get too emotionally attached. I could go on all day with these, to be honest with you.
Well, according to Companies House, 2022 was a record year for company registrations, and more than 250,000 new businesses were registered. Matt, what does that tell us? Is that something that resonates with you?
Yeah, I mean, it's been an unusual, to put it politely, few years with COVID and the energy price crisis and difficulties of last year. And what tends to happen when you have those big shocks to the economy, you have an increasing number of businesses that close, but you also get more startups. It creates a bit of churn in the economy, and in the long run that can be a good thing, and it's an opportunity. If you go back to, say, the dot-com bubble from 2002, when all those initial early startups in the internet collapsed, and funding for that collapsed, but the investors who got back in that market quickly after that, a lot of them made a lot of money because everyone had backed off of that, and there were some great opportunities there, and the people that went in and invested in them actually made a lot of money over quite a long period of time. So things are volatile, but at the moment it is, in some sense, it's a difficult economic climate because of the shocks to the economy and the slow growth. But there's an opportunity there, and people who've got good ideas can make a lot of money. And there's more churn in the economy, more change, and that's an opportunity for entrepreneurs. So don't hold back just because it's difficult times. Actually, a lot of the best ideas come out and thrive in that difficult environment.
Warren Buffett said, "Only investment is blood on the streets."
And what is it they say? about necessity being the mother of invention. Is it? It's a phrase like that. So tell us, Matt, what else does British Business Bank do? I know that it's got a lot of schemes to help startups. Talk us through some of those.
So, I mean, the first thing and the most useful starting point would be we've got a finance hub on our website. So that points, goes through different types of finance that startups can potentially use, gives examples of providers that we work with through our programs, and just answers some very basic questions about what these, if you don't know what crowdfunding is or you don't know what an angel investor is, there's a description there and that can get you started. But that really is only a starting point. It's really useful, and I'd encourage businesses to look at that, but then go out and talk to people, as Leroy said, talk to people who've done it and tried and learn, get the basic ideas, and then talk to people who've done it in practice. And we do have, as I mentioned, startup loans. I mentioned the Regional Angel Program. There's a number of things we can do, and there's lots of other places where support is available. There's so many of them, it's difficult to keep track. But we give some examples of links to places where you can get grant support from local authorities or schemes like that, or and so on. So there's quite a lot of information there. I think we talked about how many new businesses registered with Companies House last year, and there's nearly, there's over 5 million small businesses, and a lot of them are sole traders in the UK, and there's a huge number of new startups every year. The majority don't necessarily use external finance because a lot of people manage to do it from their own savings. But we've got data which suggests about 1 in 3 businesses uses external finance, and the majority of those are debt, and it's quite simple stuff like overdrafts and loans and credit cards. Only 1 or 2% actually use equity finance. But if you are going to become a high growth business, you are much more likely to have had equity investment, because that's what really gives you that boost, because you've got slightly more time. You're not immediately trying to pay off the overdraft or pay the loan, and you're getting advice from your investors. So it's only suitable for a small number of businesses, but those that become high growth and really grow are much, much more likely to have used equity than those that just establish and carry on as a little sort of small business on its own.
So you're saying because they've got that capital investment, they can think big?
Yeah. Maybe not as big and as quick as some like Leroy would like, but the evidence is the higher growth the firm is, the more likely they are to have used equity finance.
When you're pre like we're seed now, when you're pre-revenue and pre-seed, it's a almost impossible market for anyone right now, because for a start you have all of the VC and seed investors saying, sure, yeah, we invest into pre-revenue, but in reality they don't anyway, and even worse now than before. They are just being really picky and only investing into things which are already winning, already generating revenue, and are basically A round plus investments. So loads of founders waste a lot of time speaking to people who are just keeping a track on them for the future if they survive, which they few of them will survive because won't have any funding to survive in the first place. So lots of would-be really great businesses at that pre-seed stage are being kind of missed out on. And then you've got this trend following of investors as well, which is today the trend is AI. So everyone's doing this, following the sheep into AI, of which the same, maybe 2% of them will be amazing companies, the same percentage of any other kind of trend of companies, and they're not investing in anything else. And so they're kind of ignoring their thesis of let's be safe for a bit and investing into that trend. It was the same thing in Web3 the previous year, and it was always some trend that everyone's following from a boom into a bust into. And the thing is, when you're a VC investor sometimes as well, when you keep raising these funds, because it's such a long horizon for returns as well, you don't need to answer too many questions all the time to your LPs and GP fund investors, because they almost forget they invested 7 years ago into something and only 10% of them actually returned. But I think they would do a much better job if they actually just did what they were supposed to do, which is venture, which is take risk on great ideas in a big enough market that can return enough return, big enough multiple for them, and stick to that rather than just forgetting their fundamentals and thinking, sure, let's just follow this trend and ignore lots of the other opportunities that are out there at the moment.
I mean, that's, so if I could just come in, Angie, I think that you do get trends and hot topics that become the big thing for a year or two and often fade away. But that's why I'd advise that you talk to other people who raise finance and what investors did they go to, because there are investors who don't just follow the trend. There are investors who are confident in a certain area of business, they know that industry and they know how it works and they're willing to invest in it. But it takes time to find them. So that's why I say go to other people who you know or you heard of, find out about people who've raised finance. Like, and most people will talk to you about it and ask them which investors they went to, who gave them a fair hearing, and do the best you can that way.
Yeah, founders good to speak to. It's so difficult to get in front of the right investor because the amount of times we found, wow, on their website and from their feedback, what they're looking for, that's exactly us. You drop them an email or you apply online, they don't even read it. Unless it's a warm introduction. It's much worse in America than it is in the UK, but unless it's a warm introduction, if you're not networked well enough, they're not even going to listen to it. So and sometimes they just look at it and give it such little attention that they're not even reading it properly. And I understand, and I get bombarded with investments anyway, let alone a VC or a big angel investor. But unless the ultimate thing is you have to be well networked and get warm introductions to that ideal investor as well. Here in Asia, the traction I've had with investors in the space of 2 months is about 4 or 5 times more than 2 years of trying to even get in front of investors in the UK or the US, where we can't even get a look in. Here, I speak to fund partners all the time, very easily, and have good meetings, 2-hour meetings, conversations in depth. Whereas and these guys have a lot more money to invest right now. Their economy is growing much faster. They're in a much better position economically than we are back in the UK and in the US to an extent when it comes to startups right now. But they're actually doing venture how it used to be done. Whereas it's just, and it shouldn't be a situation where the meritocracy is gone. Whereas a founder, you can't even get in front of someone to let them know about your idea. And that's a real problem, both in the UK and even worse in the US at the moment.
If I come back on that, I'm not saying it's easy at all, but the amount of equity finance from angels, VC, and those sorts of professional investors has gone up very significantly in the UK in recent years. If you go back a decade ago, it was a fraction of what's gone. Now, yes, it has come off in the since last summer, and there was a bit of there was a peak in 2021 and early 2022 in terms of values, but we're still, even in the first quarter of this year, equity was going out at the same sort of rate as it was back in 2020. So it's a much bigger market than it was 10 years ago. So whilst I'm not saying it's easy by any means, there's much more deals been done in the last sort of 4 to 5 years than there was in the decade before that. It's still not easy. If it was easy, lots of people would be doing it. But there's a deeper market now in the UK than there has been for a long time. So I'm not saying it's easy, but there is hope.
Leroy, what's going on with Pigee now? What's the next step for you? You've teamed up with some great partners from a delivery point of view, haven't you?
Yeah, so we've partnered with FedEx, UPS, Lion Parcel. We're about to sign a partnership with one of the oldest cargo companies in Indonesia, who reached out to us as well. Hopefully tomorrow we're doing that. So it's been really good in that sense. People are pretty open to business conversations, which has been really helpful here. And again, on the VC side, your investors are your partners, because often founders don't realise that. They think their team is just the people on their pitch deck, when in reality, good investors are your real team. When you've got problems, questions, you need help, guidance, first thing you should do is go back to investors and get that advice. And we've had to, obviously I'm not from Indonesia, so there's a whole wealth of information for me to learn here. And we've got some really good VC investors here who have been really here and in Singapore, who have been really enthused in what we're doing. They understand what we're doing, and they've come in to get involved. Even though our current round, we're raising $2 million at the moment, and we're probably going to close it next week at the moment.
And what about expansion? You're in Indonesia now, but this is a global concept, isn't it?
Yeah, after here, Thailand, then Mexico. But for me, I feel a bit sad because I really wanted this to be a British business that went around the world and did amazing things, but I couldn't get any of that interest or traction at all. And I'm a 4 times founder who's won awards, been CEO of of all kinds of businesses. And I still, so imagine you're a first time buyer, I don't know, but I couldn't get any kind of backing at all, the kind of backing I needed. And anyone I spoke to, what they were, yes, you can get a £25,000 grant, but what am I going to do with that? The only reason we even got this far is because I put the money behind it to get to here. And if I hadn't had that funds, it would just be another pipe dream that would never make it. Whereas, we're on target to do big things, and this should have been British money behind it, to be fair. There should have been British investors behind it making it work and seeing the reward.
Matt, let's bring you in there. Why did Leroy, you've said yourself he's got a great concept here, he's got a great business. Why did he have such a trouble finding investors at home in Britain?
It's difficult for me to, it sounds like a great idea, and sounds like you've got a track record, Leroy. So as you say, you're better placed than a lot of people who start this off who haven't got that track on before. All I can say really is it's finding the right investor is difficult, and the more money you're trying to raise, the more difficult that is, because you need someone who can fit with that. I do think there is better availability and capacity in the UK on the investor side now, and there's a bigger number of angel investors than there used to be, and there's more venture capital funds than there used to be, and there's crowdfunding options which didn't exist 15 years ago. So and we're doing all we can to support and try and strengthen those channels, and signpost people towards those types of finance and providers of those types of finance. But it is difficult. It's not easy. As Leroy said, get as much advice. Try and get those warm introductions to the investors rather than just a cold email, because they do get hundreds of thousands of those, and it's difficult to stand out in an email inbox. So try and get those warm introductions, and prepare yourself as best as you can.
Any final thoughts, Leroy, before we wrap this
Yeah,
up?
I mean, like I said, we couldn't be more prepared. We were on a 6 month accelerator, graduated from that, did everything we can do, thousands of emails, everything we can do. I mean, I've raised a lot of money in the past from different countries. I've raised money in the millions from different countries, but the UK, I really, really struggled to ever raise money in my experience, and it shouldn't be that way. We're so good at making it easy to set up a business, and I've set up business all around the place. England is one of the best places to set up a business, as far as you're like setting up your taxes, setting up the corporation, everything. Super cheap, super simple to do so. Even banking, which has been a bit difficult in the past, but it's got a bit easier in some instances now. Some digital banks around. They've got all of that stuff really right, but where we're lacking is imagination, and that's where places like the US and Singapore leave us for dust, and it's really, really dangerous, I think, for our country. We need to be much more imaginative, much more belief in ourselves, much more less risk averse, and just go out there and do some things that are going to change the world. Not sit at home trying to put £20,000 into a small business. We should be thinking really big.
Matt, are we lacking in imagination?
I think we have lots of great startups in the UK, and we know we need to do more to help them scale up. But I don't think it's as much a lack of imagination. It's just really difficult. We benchmark ourselves against the US, where there really is that culture of risk taking, and if we could move the dial on that in the UK, it would help.
Well, that's all we've got time for now. Thank you to both my guests. I'm Angela Walker, and I've been in conversation with Leroy Lawrence, founder of Pigee Post. Thanks, Leroy. And Matt Adey, the Director of Economics for the British Business Bank. Thank you, Matt.
Thanks for the invitation.
And for more information, check out my website, angelawalkerreports.com, where you'll find more information about other podcasts in the series, and you can see more of my work. And if you know someone who's inspirational, or if there's a story you think is underreported, then drop me a line. Until next time, take care.